Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. As you can see, my portfolio, this portfolio anyway, has now crossed the £57,000. I wouldn't be surprised if it does if it changes in the next couple of seconds, because the UK markets are up and the US markets are still closed, so probably that's why it's now £57,000. That's absolutely crazy. Some of you have been a little bit confused about the thumbnails. I normally put the price that I put the portfolio, like basically I just converted this £57,000 to dollars and I put that on the thumbnails because I've been doing that for a while, so I just kept it as dollars. So don't be confused, it's the same thing. £57,000 in dollars, whatever it is, I just put it on the thumbnails when I actually post these videos, right? But yeah, so the portfolio is doing all right. I mean, yesterday we had an all right day in the markets. It was up and down, just the usual. Okay, nothing new there. Recently, some of you have asked me to share my watch list. I've always done this every single month, like every 2 months. I think sometimes I do it for 3 months. I just do one video where I talk about the companies that I would like to own in the next 2 months, 3 months, and the price target. So my price entry, for example, if it's a new stock, so when will I actually initiate a new position? If it's stock that I own, when will I be adding to that stock, and at what price, and so on. So what I want to do today is I want to talk about basically these stocks. I want to share it with you. It's just going to be a quick video. It's not going to be that long. So I just want to give you an idea of what I normally tend to do in these kind of situations, and then hopefully you can do the same for yourself. The reason I like to do these things is because the market right now is very volatile, right? So in just the last year to date, for example, so since the beginning of the year, okay, we've had so much craziness happening in the stock market. And as you can see here, everything more or less is basically down, apart from oil companies. And we know the oil companies, because of the war, because of the shortage, because of all the madness that's happening in Ukraine and Russia, whatever, is actually being crazy, right? But when you look at the rest of the sectors, it's not really. There's the only other sector that's doing all right is healthcare, and mainly these 3 companies in healthcare. So Merck, for example, and Bristol Myers, as well as the Eli Lilly's. Those are the 3 companies that are doing really well in there. And you've got a lot of the oil companies. More or less every single company in that sector is doing really well. And the consumer defensive is only Coca-Cola, I think, that's doing all right. And then a couple of utility companies, and because of obviously what's happening with the energy prices, utilities tend to do well because they are needed, obviously, and so on. But the rest of the stock market is actually been down quite a bit. Like companies like Microsoft is still down 17% a year to date this year. Google, for example, 20%. Meta, don't even talk about it. That company, 52% down right now. So there's a lot of volatilities, and sometimes you just need to have your own watch list. And then when that company hits that price target, then you initiate your position. That is really that simple. You don't have to overthink, oh, is it going to go down more? Is it going to go? You can't time the market. So if you like Adobe, for example, and your price target was 400, put that in, just leave it. And then the day it hits that price, then just initiate a new position if you got the money. You know what I mean? And if it goes down more, then even better, because you're buying a great company for a discounted price. And that's what I like to do. That's what I've been doing. And that's why some of you ask me, when would you actually, how often would you buy stocks and things like that? I just buy every week. Okay, I have my basic watch list, and every single week my plan was, and it still is, to put £250. Okay, that's £1,000 a month, every single month. Okay, so £1,000 every single month. And you've seen my portfolio updates. Some months I put at least 2.5. Every penny that I can get, I just throw it in the market. Why am I doing that now? Because I know hopefully in the next 5 to 10 years, I'll look back and say, do you remember when basically companies like Salesforce were selling $182 per share? And hopefully that by then, this stock will be at least double the price it is right now. Hopefully that's my plan. And based on the research, based on what's happened in the S&P 500 in the last 20-30 years, Okay, it basically stocks normally double, within every 5 to 10 years, and that's hopefully what would happen. If that doesn't happen, at least then I've actually tried. I gave it a go. And like I've always said to you guys, I'm not a financial advisor, but it's one of those things I just like to do and just share it with you guys. So you just have to do your own research. So let's get started on the video and just talk about the companies that we want to talk about today. So this is my watch list for August to October. So for the next 3 months, these are the companies that I'm watching. These are the companies that I want to add to. So I'm going to give you an overview very quickly. You can pause the video if you want to and have a look at the different sections. But I just want to talk about very briefly a couple of things in each company, right? So public storage is basically a new addition to my portfolio, and it's real estate. I've done a video a long time ago. I do like this stock, and in terms of PE wise, it's a little bit high, but I'm not really too concerned about that, because fair value for this company is according to Morningstar. This information that I'm using comes from Morningstar, because like I've always said to you guys, okay, I have a subscription, and what I like to do is I like to go into their website and look at their fair price, for example. So like this is Procter & Gamble, for example, is 15% premium. Their fair value price is $124 per share. Okay, so I use that, and then what do I do with it? I then add, so for example, let's go down to Procter & Gamble, because we've talked about that already. $124 per share, right? Then I give myself a margin of safety of 5% for this company. So there's not a lot of, so the idea is, if the companies that I'm investing in carries a lot of risk, then I increase my margin of safety. If it's company like Procter & Gamble, just consumer staples, there's not a lot of risk in there, then it's just 5%. Some companies will be 10, some companies will be 15%, and that's something that I want to share with you guys. So right now, as we speak, for this company is only 5%. Okay, my price initial basically target is $310 per share. That's about 5%. Okay, now will this company go down 5% in the next couple of days? Absolutely yes. Okay, it can happen. I'm not saying it's going to happen, but it can happen. Why? But this stock, because the 52-week low of this for this stock was $292 per share. We're talking about $310. So it can go back down. Okay, and I have seen it. It was once actually I nearly initiated a new position when it was about $300. I wish I did. I didn't do that, because I actually took that money and put it something else, right? I bought something else with that money. But it can happen. So you just have to be patient and wait. Don't rush. The stock market is very volatile right now, okay, because of the so much uncertainty that's going on right now. Just don't panic. Just keep your plan intact and just do what you need to do. Don't panic, buy and whatever. Okay, next company is Medtronic. Okay, my price target is the fair value is $129 per share. Ideal entry is $123 per share, but right now it's 24% undervalued. Okay, so what am I doing? I'm buying right now. So this week I'm actually adding to this company. The lowest they've been so far this year is in the 52-week low was the $86 for sure. So it can definitely go even further than this. So I'm still buying. I'm down a little bit, I think, right now. We'll check that in a second. Lowe's is the next company. My price target is $199 per share. It's undervalued at the moment, and I hope that it continues to going down, because I'm going to add to as well. So these two companies right now in the green. So I'm definitely adding to these two companies right now. Next one is Broadcom. So these two, I'll do them together because they are in the tech companies right now. Because I'm overweight on tech, I'm not going to buy a lot. I'm not going to put a lot of money in these two companies, right? I'm going to add a little bit here and there whenever I can. Although this is a new position and I would like to increase it, is because I own so much tech companies. I'm trying to diversify away from tech and into the real estates and healthcares and energy, for example, which we'll talk about in a second. The other sectors and the financial services and so on. Okay, so these two are the same. Financial services is SPGI. I own 4 shares. I want to add more, but it needs to come down at least to 5%. My entry price is $356 per share. Okay, so that's where I'm at. So it's gone down up to $311 per share. So that could be, it could go back down again. If we see a couple of weeks of very volatile market, it will definitely hit that, because it's quite volatile, to be honest with you. Union Pacific is the next company, industrial company. I really like this company, and right now it needs to come down at least to 20% for me to initiate. I think if it goes to $200 per share, I think I would basically add to it. Like I've always said, I need another $3, three stocks on this company. Cummins is another company. I absolutely love this business. Okay, I want it to go down at least to 200 so I can add more to it. Home Depot, it needs to go down at least to 25 to 20% for me to even look at this company again. Okay, it's very expensive right now. I mean, PE wise, it's not that expensive, but when you look at what's happening in that sector, the consumer discretionary, meaning people will not be renovating their houses and things like that when they are actually more worried about, eating. You know what I mean? So if the recession happens, and right now in the US, people are saying, oh, we're in a recession. No, we're not in a recession. Oh, they're fighting over the definition of what recession is, right? So right now, I'm not sure what's going to happen. So I'm going to leave this stock alone for a bit until it hits at least my price target of $251 per share. You can see right now it's $305 per share. UPS is another company that I own. It needs to go down at least 10% for me to add to it. I think I have 10 shares right now. The EPS, PE is really low. Look, sometimes you can't just buy stock based on the PE, because look at this. It's got PE of just 15, but the price target according to Morningstar is $186 per share. Basically, I've given myself 5%, if you can see there, 5% margin of safety. That was $177 per entry. Now, the next two companies are oil companies, so I'll do those two together. The EOG Resources Energy is the energy company. Again, their PEs are very low. I genuinely don't think oil is going anywhere. I don't believe I should add them right now to my portfolio, I'll be honest with you, but I want them to come down quite a bit. And if that happens, okay, because look, they are the best performance stocks. So for example, CPX or the Chevron, for example, is 37% up this year. Okay, this one is up 23%, right? But look at the Exxon, for example, up 54%. I'm not touching these stocks until they come down quite a bit. But I do believe every portfolio should have some energy stocks in there, whether it's renewable energy or this type of energy, whatever it is. I think I just need to diversify into energy, hopefully in the next couple of months. But I'm not going to add to them. I'm not going to buy them until the price hits my targets. Okay. Next one is PPG and Sherwin-Williams, both of them great companies in the basic materials. I own this one. I don't own this one. Okay, I would love to add to this one. I've done a video very recently, but my price target is 107. 110 is all right, but it needs to come down a little bit for me to even look at that. And the final two companies are J&J and Procter & Gamble. Again, those two companies, after these two companies and Microsoft are my three best favorite companies out there. Obviously, if the fundamentals change, I can change my mind, but right now they are one of my favorites. So $167 per share is the fair value for this company. I'm giving myself 5% discount, okay, but a margin of safety, sorry, and $159 per share is my target. So it needs to come down at least to 10%, and it has gone down to $155 per share before, so it can go back down. And again, this is one of the companies that doesn't go down a lot, so I might just start adding here and there a little bit. I haven't touched it. I've had, I think, 26 or 27 shares for a long time, so I think maybe in the next couple of months, I'm hoping, even if it goes down at least 5%, I might start dollar cost averaging into that company. Same goes for Procter & Gamble, and $124 per share. Like we said earlier, 118 is my target. It needs to come down at least to 20%, 21% for me to even look at it. The lowest it's been is $129 per share. So that is not going to happen. So I don't know what I'm going to do. Maybe I'm just going to buy here and then take the hit and see what happens, okay? And because I own it already and my price increase was actually quite low, I don't want to average up as well. So I don't know. I don't know what I'm going to do. So the companies that I have more than 5% are these companies, okay? So when it comes to the tech companies, anything can happen in tech. So I have 15% margin of safety on this company. If I just change that to 5% only, it becomes 10% undervalued at the moment. But because it's a tech company and these companies are very volatile right now, and especially what's happening in the stock market, I just want to give myself time, like just a little bit of margin of safety. Okay. And this one is exactly 15 as well. Lows and companies like that is 5%. You can see there another 5%, another 5%. So majority of these companies, at UNP, because I own this stock already, I gave myself 10%. Okay, I want this company to come down to at least 190. Okay, so I can add to it. So that's 10%. This one is 15% Cummins as well. Okay, so if I just made 5%, watch what happens. Okay, it actually becomes undervalued at the moment, but I want to keep it 15% because it's not volatile, but I own quite a bit of that company already, and I would love to have a lower price tag. Okay, so if I can have a really better entry than what I had before, which is basically, I think mine was like $220 something per share. If I can get it around $200 per share, then that will give me in the long run a better return for my money. Okay, Home Depot just 5%, but again, it's one of those companies is not even going to come down that much. Okay, this one is 5%, that one is 10%. So the oil companies, actually I've given myself 10%. So both oil companies, so this is 10% and that's 10%. Why? Because energy stocks are very volatile. They can go to 0, they can go to 100 in a day. So it's one of those companies, one of those stocks that I just want to, and don't even know where the energy is going in the future. So that's why I'm giving myself margin of safety. Margin of safety is really great thing to do. If you haven't read the Benjamin Graham, the Intelligent Investor, that's something that he talks about a lot. And as an investor, you have to basically give yourself a margin of safety all the time, because anything can happen. You might think Lowe's is going to be around for 100 years and nothing is going to happen, but something can easily change. Something can happen. The law can change and all of a sudden the company goes down 20, 30, 40, 50%. We've seen companies that go to 0. Okay, anything can happen. So margin of safety will actually protect you if you are quite careful about what's happening. So that's my list. Okay, these are the companies that I'm watching. So what do I do? Let me quickly show you. For example, one of the companies that we talked about is Cummins. For example, my price target, whatever it was, is there. So this is basically platform will send me an alert as soon as basically that price target is met, and then it will basically, then if I have the money in the account, then I'll initiate that position, I'll add to it, I will do whatever I need to do. Okay, so same thing again. I haven't put this one on yet. So companies like Lowe's, for example, I haven't put it because it's already undervalued. Medtronics, I haven't, because it's already undervalued as well. So the companies that are already undervalued, I haven't actually done it. For the companies that are not, I've done it already. So it's just there, sitting there. The day it happens, then that day I buy this stock. Otherwise, so what I do is I take a screenshot of this on my phone, and I keep it, because sometimes I buy stocks on my phone. So what I will do is I'll take the picture, screenshot of this, and then I'll keep it on my phone. And then when I get the price alert, I will double check if it was the most up-to-date version of what I have. And then if I have the money in my account, then I'll initiate that position and I'll add to it. Right, I'm doing a portfolio update next couple of days, so I'll share that with you. I hope you're having a wonderful day. And as always, I don't really promote this channel as much as I should, I'll be honest with you, because I just feel like I just do it because I enjoy it, and I just want to share my journey with you guys. Okay, but if you like the videos, it would be really nice to like the videos if you can, subscribe, share with your family and friends if you find any benefit. If you have any questions, if you would like me to create maybe subscriber watch list, okay, let me know your companies that you want to see, and I will do exactly the same thing. I will go to Morningstar, I will find the price targets for you guys, and then based on what I think, I can tell you whether I think it should be a 5% margin of safety, 10%, 15%. And again, remember, it's not financial advice, but it will be a good idea, I think, to do that. So if you are still watching, just let me know the companies you would like me to add to. I'll collate it, I'll put it all together, and then hopefully I'll share that with you. Have a wonderful day. Assalamu alaikum. Take care.